Welcome to my YouTube channel, Taxation of Partnership Part 3. We just looked at the previous slides where I'd shown you how to calculate the tax-adjusted profit after capital allowances being the amount to be taxed. And I did mention that for taxation purposes, partnership are going to be taxed using a system known as pass-through income. Why is that so? It's because the partnership as a firm does not pay tax. Instead, the ones who pay tax are the partners themselves. So when we arrived at a tax-adjusted profit after capital allowances of 231,612. Now it is time, I said, to calculate how much is going to be attributed to each partner. How are the partners going to share this amount so that they can be taxed? So I ended up looking at this particular calculation in this manner. What you should note is that in this particular situation, we had a change of partnership partway through the accounting period. So that leads to dividing the charge year into two notional periods. One for 3 months, running from January to March 2023. The other one is for 9 months, running from April to December 2023. So the way we are going to calculate this particular amount, which is supposed to be taxed under each partner, namely shirt, belt, and tie, is as follows. We use a template or a format which is going to look at partner's salary, and then we're going to move to the next row, which is going to show you how the profits are shared. Then we're going to have a subtotal for that particular notional period, the notional period of 3 months running from January to March. Equally, the same will be applied to the second notional period, which runs from April to December, where you have to show what are the partner's salary for that particular period, and then their share of profit in the profit sharing ratio. Again, we are going to have a subtotal. So let's look at where we're getting these figures. As I explained before, we had a situation where the partners for the first period had to be paid 40,000 each per annum. And I did show in the previous session for taxation of partnership part 2, I demonstrated how we arrived at the figure of 10,000 kwacha under shirt and 10,000 kwacha again under belt. So please, if you missed that particular presentation, I encourage you to go back and check how we computed these particular figures. So I'm going to continue from there, and as such, we have 10,000, which is representing a quarter of the charge year. So we have 3 months in a quarter. That led us to use the proportion or the ratio 3 out of 12 multiplied by 40,000, which is the annual salary. So when you get that, you're indeed going to get 10,000 kwacha. So since there are two partners, each getting 10,000, the total comes to 20,000. So if you add 10,000 under belt and 10,000 under shirt, you get 20,000. Once you have arrived at the total, then leave a row in between for share of profit. In this case, where they are supposed to share the profit, the residual profit in the ratio 2:3. So leave it blank, then go to the next row, which is subtotal. Now, where do I get this particular 57,906? For you to get this one, remember that the taxable amount is 231,612. 231,612. 612 kwacha. Now, there are two notional periods involved. There is one for 3 months, January to March, and the other one for April, from April to December, which is 9 months. So meaning that total taxable profit, tax adjusted profit 231, needs to be apportioned between the two notional periods. They need to be apportioned between the two notional periods. And as such, I did use a simple calculation to help us see how that figure is divided. Okay, so let me look at this. This is what 231,612, 231,612, 231,612. Let me just make an adjustment there. It's supposed to be 231,612, 231,612. Equally here, you have 231,612. So when you work out this ratio, okay, when you work out this ratio, you are going to find that for the first period, it will be 57,903, 57,903, 57,903. That is what's supposed to reflect there. And then for the second notional period, the second notional period will also show a figure of 173,909. 173,909. 709 rather, 709. So that's how it comes to. Okay, so that's the calculation that you make, so that you apportion the total 231,612 to two notional periods, one of the value of 57,903, the other one with the value 173,703. So that's what you see being brought here. We have the subtotal 57,903 in the first notional period. We also have a subtotal 173,709 kwacha for the notional period running from April to December. So you put those figures there, meaning that in between here there is a gap of that much. So we fill up the gap to find the difference between 20,000 and 57,903. You are going to get 37,903, the balancing figure. So that when you add 20,000 to 37,903, you are going to get the total 57,903. Once you have got that particular share profit, the balancing figure, then you have to share it by the partners through by using the profit sharing ratio, in this case given as 2:3. So how do you do that? You add 2 and 3 to get 5, and then as a proportion of that 5, 2 parts out of 5 relate to share. So you're going to say 2 divided by 5 times the 10,903. What you are going to get is 15,161 kwacha 20 ngwe. And then you do the same for what relates to belt. It is 3 parts out of 5 multiplied by the total, which is the 10,903. You are going to get 22,741 kwacha 8 ngwe. So we have arrived at these two figures, which add up to 37,903. So now we do the totals vertically. So you get 10,000 under shed, add 15,161 kwacha 20 ngwe. You are going to get a total of a subtotal of 25,161 kwacha 20 ngwe, being what shed received in the first notional period running from January to March. Then we go to belt. Equally, we add the two figures, 10,000 to 22,741 8 ngwe. We are going to get 32,741 kwacha 8 ngwe, being what Belt received during the first notional period running from January to March. Ty was not in the picture by then, so we put dash there, and again here dash. Okay, so we move on to the next notional period. The next notional period, we start with the partner's salary. Again, I take you back to look at working number 1, where we had already calculated what was due to Shet, which was 24,000. This is picked from our presentation of partnership part 2. And then we also had Belt coming up with the 22,500 as salary for 9 months. Now this time Ty has come into the picture, so we have got 21,000 under Ty relating to salaries. When you add these 3 salary figures, we get a total of 67,500. 67,500. Remember, I said that the next row, which is share of profit, in the ratio of 5 to 3 to 2, given that there's a change of partnership agreement partway through the charge year and the profit sharing ratio has changed, this row should be left blank. So we had gone to fish out the subtotal of 173,709, which we put here. And then once we have put it there, from this particular last point, which is this one, we got this 173,709. That's the one we have pushed in here as 173,709. You are seeing here. Then there's a gap here. There's a blank space here. This blank space is filled by finding the difference between 173,709 and 67,500. We are going to get the difference as 106,209 kwacha. So this difference is going to be shared by the partners Shet, Belt, and Ty in the profit ratio 5:3:2. So what we do, we add 5 plus 3 plus 2, we get 10 parts, then meaning that for Shet, what is attributed to Shet is 5 parts out of 10, so it will be 5 out of 10 times 106,209 kwacha, which is going to give us 53,104 kwacha 50 ngwe coming under Shet. Equally or similarly, for Belt, he is supposed to claim 3 parts out of the 10, so 3 parts out of the total 10. So we are going to say 106,209 kwacha multiplied by 3 divided by 10. We are going to arrive at 31,862 kwacha 70 ngwe. Okay, so the same applies to Ty, who has now come into the picture. We have 2 parts out of 10, so 2 out of 10 multiplied by 106,209 kwacha. We are going to get 21,241 kwacha 80 ngwe. Having done that, we look at this second national period and find the subtotals. So we get 67,500 added to 106,209 kwacha to get the total 173,709 kwacha. Equally for Shet, we add 24,000 to 53,104 kwacha 50 ngwe. We get 77,104 kwacha 50 ngwe. For Belt, we add 22,500 to 31,862 kwacha 70 ngwe. We get 54,362 kwacha 70 ngwe. For Ty, we have 21,000, and we get to add it to the share of profit, residual profit of 21,241 kwacha 80 ngwe. We get 42,241 kwacha 80 ngwe. So these are the subtotals which relate to notional period number 2, which runs from April to December of 2023. Now we need to get the grand total so that we know how much each particular partner received from this partnership running from January to March. We simply add the 2 subtotals. So in this case, we start with the total 57,903 added to 173,709 kwacha. We get a total of 231,612 kwacha, which apparently will be the total which is assessable amount for tax on this partnership. Okay, so 231,612, that's what we get back. Okay, fine. We also do the same for shared. We get these totals, which is this line here. Let me put it in bold. This line is the one which we consider, and then add it to this other line, which is our subtotal in the second notional period, which is again in this particular case that one. So all we need to be doing in this case is add the two subtotals. Add the two subtotals. So in this case, we have 25,161 kwacha 20 ngwe, added to 77,104 kwacha 50 ngwe. We are going to arrive at 102,265 kwacha 70 ngwe to be the total income that Shet has received from this partnership to be taxed by him or by this partner. Then we have belt. Okay, we have 32,741 tengwe added to 54,362 kwacha 7 tengwe. We are going to get 87,104 kwacha 50 tengwe. That should be under belt. For tie, in the first notional period he had nothing, but we only have in the second notional period a total of 42,241 kwacha 8 tengwe. That is going to appear here. So we have now managed to determine how much each partner takes in terms of what amount the partnership made to be taxed. So I did mention that the partnership uses an income pass-through system where the partnership income that is made is not taxed by the partner, but indeed taken to the individual partners and is taxed under them. So that's what we have managed to do. We have managed to get the grand total figure for shed, the grand total for belt, and grand total for tie. These are the ones which are going to be assessed. So then we move on to look at how do we assess these partners. Looking at my previous videos, I have shown you how we calculate the tax liability of taxpayers. So a similar pattern will be adopted here. So let's look at that. So we have a computation of partners' tax liability for charge year 2023. We have shed, belt, and tie. Under each partner, we are going to show the column taxable income and income tax. Taxable income and income tax. So getting from what we have already calculated, we have seen that Shet has 102,265 kwacha 7 tengwe. So that is what is going to appear as assessable income under Shet, 102,265 kwacha 7 tengwe. Similarly, belt has 87,104 kwacha 50 tengwe. Okay, and tie has 42,241 kwacha 8 tengwe. Now, in the charge year 2023, the Zambian government, through the Revenue Authority, published in the ZRA practice note that the tax-free income threshold has increased. It has increased from the previous amount to the current 57,600. So the 57,600 is an amount which a taxpayer during the charge year 2023 will not be required to pay tax on, or will be charged 0% on the first layer of his income for the charge year 2023. So that applies for these taxpayers, shed, belt, and tie. So we have under shed, we are going to remove the first layer of income to be taxed to the tune of 57,600, which is taxed at 0%. Therefore, we pay tax 0 kwacha on that amount. So that reduces it to 44,665 kwacha 7 tengwe. Whereas for belt, we had assessable income for the whole charge year of 87,104 50 tengwe. We remove the tax-free income of 57,600, which is taxed at 0%, therefore 0 kwacha income tax. We remain with 29,504 kwacha 50 tengwe. For tie did not reach the threshold, you didn't utilize the maximum benefit of 57,600, since he only has 42,241 as the income. That is the extent to which he's going to utilize what is he's entitled to use in the charge year 2023. Out of 57,600, since he has only 42,241, we are going to limit it to 42,241 as tax-free income. So when you remove that one and you tax it, it is taxed at 0% because part of the same incomes layer. So we're going to apply 0% on this for the 2,241. Hence, we are going to get 0 kwacha on that income for TAI. So this is going to mark the end of what is supposed to be assessed for TAI. So it means that for the charge year 2023, if this is the only income TAI had, he pays no tax on this particular charge year. So meaning that we continue to get to the next layer of income, having removed 57,600 from 102,265 kwacha 7 tengwe under shed, we remain with 44,665 kwacha 7 tengwe. We have to tax the next layer, the maximum of 24,000 and 20%. So we remove 24,000, which is the next layer of income, tax at 20%. We get 4,800 kwacha as income tax. So that leaves us with 20,665 kwacha 7 tengwe for shed. For belt, we remove 24,000 kwacha from 29,504 kwacha 50 tengwe and tax it at 20%. Therefore, he is going to pay on that slice 4,800 kwacha as tax. Okay, so when we remove 24,000 from 29,504 kwacha 50 tengwe, we remain with 5,504 kwacha 50 tengwe. So this goes into the next layer, okay, the marginal rate of at the marginal rate of 30%. At the marginal rate of 30%. So for shed, what remains is 20,665. This marginal rate 30% applies to the maximum slice band of 25,200. Now, since this did not reach 25,200, we make do with what we have so far, which is 20,665 kwacha 7 tengwe. At 30%, that gives us a tax of 6,199 kwacha 71 ngwe. And that marks the end for income to be taxed by shed. Okay? We move to look at belt. Belt as well remain with only 5,504 kwacha 50 ngwe. So we tax this balance 5,504 kwacha 50 ngwe at 30%, and we get the tax to be 1,651 kwacha 35 ngwe. Again, that marks the end of income to be taxed under belt. So meaning that all the income has been exhausted, so we simply now add the column for income tax. Under shed, we look at the income tax column, we add 0 plus 4,800 kwacha plus 6,199 kwacha 71 ngwe. We are going to get 10,999 kwacha 71 ngwe as a total tax liability for shed in the charge year 2023. Similarly, we go to belt, we just look at the income tax column. We have 0 plus 4,800 plus 1,651 kwacha 35 ngwe. We get a total of 6,451 kwacha 35 ngwe at the total tax liability for belt in the charge year 2023. For TAI, there was didn't pay any tax. There's 0 there, so we just add 0. There's nothing else to add, so we put just 0 here. So this reflects what is the total tax liability for charge year 2023. We have seen that for partnership, the partnership itself as a firm does not pay tax, but the partners are the ones, the individual partners are the ones who pay the tax. So this is what it means. So that's how we have come to arrive at these amounts taxable by revenue authority on the 3 taxpayers who are partners. So this is how you calculate, and these are some of the workings I've been looking at, and this is how I shared the taxable assessable income to the two notional periods. So this is what we can say is a comprehensive example to deal with partnership taxation. I think we are going to come to an end of this particular presentation. Don't forget to like my channel or like my videos and subscribe to my YouTube channel so that you enjoy more presentations. Thanks for actually listening and watching my videos. See you next time.